Good morning, everyone. Today is Thursday, June the 6th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Remember, today you can see me both on how to invest like a pro at 1 p.m. and early this morning on Fast Markets on Topstep TV. Okay, so Bank of Canada, part of the G7 or G9, who knows what they're calling themselves these days, reduced rates, quarter point. ECB followed suit today. We have the job numbers coming in tomorrow. Big spike up and then a collapse down. But what we are noticing is a breakout in gold. And so this is where we're going to start. Last night on Fast Markets with Coach Dakota, very big move up here and then a fade down. We'll have to see if it can hold 2360. This might make a pretty nice breakout. Here's the rub. What is momentum and trend? Well, they're both down. This one's down to flat, and this one's down to flat. So both flat, saying that the dips could be fairly savage. Watch out today, folks. We have had a pretty solid reversal since the ECB came out, and so just be careful there. Going to oil. Oil is bouncing off of that. Wow, it came shy of my 72 number by about what? 72.48. Did not trigger my 34. Well, that's our first real bounce event. We could have a mean reversion. Comes right up here into 76.65. We're making higher lows, so we have to be very careful about shorting lows here, even though trend is very steep and momentum is very steep. What's changing is the actual pricing points, and so we're making higher lows. We want to look for a test of resistance before we engage in the short. It's going to be somewhere around there. All right, at 76.65. As it sits, pullbacks into 73 could give us a nice buy zone. Tomorrow is the employment number. Today we have jobless claims. Did they just come out? Yes. Yes, they did. Probably a strong number based on what price action is doing here. So let's just hop to it. Let's start with the ES. And we can see that the ES, here's what I've done. I've erased all the lines. We went back to the largest volume area of recent days, and we're looking at how the participants in the near term are responding to the swift change in motion, and they are all long. They piled on in, shorts got clobbered, very big candlestick formation, very fast move. What is my thought? Fade to support. That's just natural. That's my natural thought. Now, what if this squeeze upside is still in motion? Well, that's going to mean that the high of the day, yesterday, 53.68, is going to get broken. And if that gets broken, it's 53.78. And then we test the 5400 area with the 50% range somewhere around 54.10. What do I think today's going to look like? Pullbacks or buy zones. If the pullback stays shallow, meaning 53.50 holds, which is an old call wall, then we're going to see another big rise to the north. Let's take a look at the NQ. This morning I will be on with the Wharton School of Business at UPenn on Sirius Radio. I would love for you to come here if you're interested in that sort of thing, and you have Sirius. Would love to know that you're there. I'm on with Janet Alvarez, chatting about macro things and trading things. So here's this. This is what I'm doing. Looking for the highest near candle formation in the highest volume. We're going to move up to the top and look at this. Wouldn't you know? We're banging up on the edge there. Let's clone it again, so that we have the upside measurement. And then let's draw our lines. What are we looking for? Very big move up. Very big move up, right? It's been a long time since we've had a candlestick that was almost a Maribozu. Shallow dips, moving averages up, momentum a little flat. All in all, it could mean that we have more upside easily. But I think we got a dip. And then we'll have a bounce. But we'll see how that goes. I have no idea. Here's what I'm going to do. I'm going to watch the open. I'm going to look for the volume. I'm going to put an anchored VWAP on it. And then I'm going to look for higher lows, or I'm going to look for all highs. And as soon as that gets established, folks, I'm going to follow that trend. I'm going to follow it on the 30-minute chart, but try to execute from a 3-minute chart. Okay? What are the lines in the sand today? All the way back to 18,685, and then below that, 18,626. Do we get there? I don't think so. I really don't. If we do, another story. Pullbacks, 926. Heavy congestion is at 18,850. That would be a fantastic zone to set up and go, you know what, I'm taking it along. I like that. If it comes to me, I'm probably going to take it. All right, here we are in the in the YM. This is the only one that I didn't change the pictures from because the volume candle with the highest volume is a stinking doji. Take a look at this, though. Look at how far off we are from the highs. What is this saying to us? I don't know what it's saying, but I don't think it's bullish. I do know that. And so my suspicion is the bounces, if we get any bounces into 39,000, I think I'm going to sell them. I'm going to watch for the collapse, and then I'm going to sell them. If I'm wrong, what's going to happen? Well, if I'm wrong, it's going to fail to breach 39,100, or, excuse me, if I'm wrong, it will breach 39,100, and, or, hang out in this range all day, 38,785. That could be very sideways, right? My suspicion is that, see the higher lows? It's done its reversion to the mean. Why was it making higher lows? Well, because it was headed up to here, somewhere near heavy congestion. And so the bounces look like clear shorts that could easily break through these lines. Could the YM march to the beat of its own drum again? Potentially. Let's take a look at SPY. SPY, what a move, right? Gap up, never looks back, never fills the pre-market gap, just in pure beast mode. Absolute pure beast mode. Here we are. Let's look at the top. What's going to give us a range break? If we can get up over this 535, we're going to head to 538, and then I'm going to replicate this again. I'm going to clone this. And now we're looking at areas that bring us to potentially 540, 545, and 550, right? A lot of upside pressure. I mean, a tremendous amount of it. We have to obey what the price action is telling us, and that says pullbacks or buy zones. Let's not trade what we think. Let's trade what we see, and what we see is upward trend. We know the buyers are going to resume control if they can get up and stay up over 535. If they can't, we've got sellers trying to push them back down, and that support looks like 528. Let's go to the Qs. Same sort of thing. 443 low end, huge candlestick, gap up that never fills, which is a bit rare for the Qs or the SPY. They like to fill the gaps. But notice, right up at the top of the candlestick, and they're battling here, not breaking out. So what does that tell us? If we open inside of the prior range, we need to wait to either see a pullback into a higher low, a collapse with a failure to move higher, or a combination of both. But right here at this edge, at the opening tick, unless it breaches and gives us a brand new high in that first minute of trading, we've got ourselves downside motion. I like buy the dip. Now, yesterday didn't give me much room. I just had to keep buying the tiny little dips on, 3-5-minute charts. So there we have it for these guys. 453, the base end, 459, old resistance, 464, breakaway into the high of 469. All right, everyone, take care. I'll see you on the platforms.